In this video, we're going to discuss an example of job order costing. So let's say you start your own company that builds tree houses for people, and you have a new customer that orders 2 tree houses from you. So you're going to basically put together a thing called a job cost sheet, and it's going to have direct materials, direct labor, and manufacturing overhead. Those are the 3 costs that are going to get charged to a job, okay? So direct materials, you have $10,000 of direct materials that you're going to use on this job. Now, don't confuse that if I were to tell you, well, you bought $18,000 of direct materials. It's only the amount of direct materials that are used on this specific job that will get charged to this job. Okay. So also we have the direct labor. So we have 400 hours of direct labor are performed on this specific job. And when I say this specific job, I mean to build these 2 tree houses. Okay, so there's 400 hours of direct labor at $10 an hour. Okay, so that's $4,000 of direct labor. And then manufacturing overhead, the overwhelming majority of companies, what they're going to do is they're going to come up with an estimated rate. Okay, they're going to come up with this manufacturing overhead rate, and they're going to apply manufacturing overhead to the job. They're not going to charge the actual manufacturing overhead to the job, because when the customer comes around and says, yeah, I would like these 2 tree houses, you don't know what the manufacturing overhead is going to be yet. It's very difficult to predict. And so we'll say in this case that there's a rate of $15 per direct labor hour. Okay, this DLH is direct labor hour. And so if there's 400 hours of direct labor, that'd be times 15. So we'll say that $6,000 of manufacturing overhead is going to be charged to or allocated to this job. So, and if you're wondering how would a company go about doing this overhead rate, well, here's an example. I've got more videos on it if you want to check it out, but they say that's a budgeted manufacturing overhead for the entire company for the period. Let's say it's 300,000, and then the budgeted direct labor hours, if that's how they're going to allocate the overhead. They could use other things, machine hours and so forth, 20,000 hours, and then we come out to $15 per direct labor hour. So that's how I came up with that number, if you're wondering about that. So we're going to have our cost of the job here, and again, we would call this a job cost sheet. That's just a little bit of terminology for you. So there could actually be a piece of paper. This is a job cost sheet, and saying it's the cost of making these 2 tree houses. And so that we said there was $10,000 of direct materials used. And again, I can't stress enough, this is the amount of direct materials used on this job. Okay, so then we've got the direct labor, which was 400 hours at $10 an hour. So 400 times 10 was 4,000. And then we had the manufacturing overhead. This is the manufacturing overhead that is applied. Okay, this is not the actual manufacturing overhead. Okay, this is the applied manufacturing overhead. And we said that is applied on the basis of direct labor hours, and there were 400 direct labor hours, $15 a direct labor hour. So 400 times 15 is $6,000. So the total cost of this job is $20,000. That's just adding up the $10,000, the $4,000, and the $6,000. So if somebody were to ask you, hey, what did it cost us in terms of our manufacturing costs? Because these are all manufacturing costs, okay? Or product costs, inventoriable costs. Okay, there's some more terminology for you. Generally speaking, with a company, when they do the cost of the job, and we're actually thinking about, like, ultimately with our inventory and cost of goods sold, you're only going to have direct material used, direct labor incurred, and applied manufacturing overhead charged to jobs. Now, there could be examples just for internal decision-making purposes where a company decides to allocate or charge some other kind of cost other than these ones here to a job. We'll talk about that in future videos, but this is the basic setup, okay, and this would be GAAP. All right, so we've got these manufacturing costs, and we say it's $20,000 to produce these 2 tree houses. Now, here's the thing. Someone might say, okay, well, on a per unit basis, what does it cost to build these tree houses? And that's pretty simple here, because we just have 2 tree houses that were made, and we say, okay, well, if it was $20,000 for the entire job and there were 2 units produced, well, 20,000 divided by 2 is $10,000. So our cost per unit, if we use job order costing here, our cost per unit or cost per treehouse would be $10,000.